Hello everyone and welcome to the Shrimpy channel. In this video we're going to talk about exchange order books and how to read them. As you can see, I've loaded up my Shrimpy application. On the trading tab you'll see the exchange order books for each trading pair. Currently we're looking at the BTC USDT trading pair, but you'll also see the chart for the OHLCV candlestick data, as well as the trade history for all of the trades that are being executed on the exchange for this trading pair. This page will look very similar to many exchanges if you're familiar with executing trades on exchanges. So let's talk a little bit about order books. Order books, as you can see here, are all of the orders that are available on the exchange for trading. So if you're somebody who would like to buy or sell Bitcoin, you would be able to come to this order book. You'd be able to see the offers that people have placed on the exchange, and you would be able to take one of those offers or place your own offer on the order book. When we're talking about people who would like to buy or sell Bitcoin, the top order book up here are orders that are trying to sell Bitcoin. So essentially sell Bitcoin for, in this case, USDT. And on the bottom here, we have orders that are trying to buy Bitcoin. So buy Bitcoin for USDT. And the reason that we know this is the case is because when you're trying to buy an asset, you would want to offer a price that's lower than the current asking price. And if you were trying to sell Bitcoin, you would try to sell it at a price that is higher than the current bid price, which is down here. So these are the asking prices and these are the bid prices. Great, so let's look at each of the pieces of data that we have here. We have the size of the order, we have the price, and we have the total amount. These three elements give us all of the information we need to know in order to place our own offer or take somebody else's offer on the exchange. The size in terms of BTC tells us how much is available at each price. So if you look up here, even though it's moving quickly, there's 0.4 Bitcoin available at the price of 11,652. So that means if you were somebody who was coming to the exchange and looking to buy Bitcoin, buy 0.4 Bitcoin, maybe that is the offer that you would try to take. Similarly, on the other side, you can have a size available at a certain price point that somebody else could sell Bitcoin at. One thing that I would like to note is that generally all exchanges will restrict you from buying at a price that is not currently the best price. The best prices on the exchange will be found right next to each other across the bid-ask spread. This is what we call the bid-ask spread. As you can see, the current best asking price and the current best bid price are on the opposite sides of these spreads. And these are the two best prices available on the exchange. Any price that we see that goes further into the depth of the order book are worse prices for you to get when you're purchasing an order. So when you try to buy an asset on the exchange will automatically give you the best price if you try to place a worse price. So say right now the best price to buy Bitcoin is 11,652. If I put a price trying to buy Bitcoin at $20,000, it would not sell Bitcoin to me for $20,000. It would take this best price that's available on the exchange. In a similar way, if we tried to sell Bitcoin for a price that was very small, say I tried to sell Bitcoin for 0 USDT instead of the current best price available on the exchange would not allow me to sell Bitcoin for $0. It would give me the best price instead. So instead of $0, it would sell it to somebody for $11,654. This is done so we don't have accidental errors on the order books and the exchange can prevent you from losing money unnecessarily. The last topic that is important to know on an order book is the spread. The spread tells us how far apart the best bid and the best asking prices are on this order book. As you can see on Binance, the spread is very tight typically. So we have exactly 0.01 USDT, which is equivalent to 1 cent. In general, when you're trading, the ideal situation is to have an order book that has very tight spread. The tighter the spread, that means you lose less value when you're executing the trade. If the spread was very large, say the spread right now was very large, say the best ask price was $20,000 and the best bid price was $10,000, that would mean you would lose a significant amount of value when executing an order across the spread because the price difference between the best bid and the best ask prices is very large. So in order to reduce the amount of cost that we incur from crossing a spread, we want to make sure we're trading on markets that have very small spreads. In this case, a spread of 0.01 is the smallest spread possible. That's all there is for this video. If you have any questions, don't hesitate to reach out to our team. We're always happy to help. We hope to see you in the Shrimpy application, and I look forward to seeing you in the next video.